And my name is Judith Kakuze, your financial advisor, and today I want us to talk about life insurance policies. Life insurance policies are the most misunderstood policies in Uganda right now. Recently, I saw a video that was making rounds on social media where someone was unfortunately misleading others, telling them life insurance companies do not pay. But later, when I listened, I realized that actually she did not understand the policy that she took out before she started. She went on to explain that her and her husband took out a life insurance policy with one of the insurance companies, and then after about 8 months, they wanted out. So they went to the insurance company and said they didn't want to save anymore. Of course, they could not be paid because that is not how life insurance policies work. And then she went on to start telling people that life insurance companies do not pay. This is very wrong information that is going out. And today we are going to understand what actually life insurance policies. Mind heritage, empowering minds. Life insurance policies are long-term in nature. Most of the policies we have in Uganda have a minimum saving period of 5 years. So this means that when you take out a policy, you're not going to go to the insurance company after a year or 8 months and say that I want out, I don't want to save anymore. No. So it's very important for us to understand when we take out these policies. And when you sign up for a policy, you are given a contract. This contract explains in detail. And if you do not understand anything, you should ask your advisor or go to the insurance company and ask for details so that they explain to you further. If you do not agree with what is in the contract, then you have up to 30 days to decline it. So do not take out what you do not understand. This is your money that you're committing, so it's very important for you to take it out, one, for the right reasons, and two, understand how it works. Mind heritage, empowering minds. So life insurance policies in nature have both life cover and savings plans. So the savings plan is the obvious part. You're putting money aside for the future. Like I mentioned earlier, the minimum saving period in Uganda is 5 years. So I choose an amount that I'm going to put aside for the next, say if I'm taking out the minimum period for the next 5 years. Now life cover. What life cover means is for this period of the 5 years when I'm saving, my life is covered against some eventualities that we are going to go into in detail. So I am both saving for the future. This means that at the end of the 5 years, I'll get my money. But also in that period, my life will be covered. So these are risk products. What does this mean? When I take out a life insurance policy, the insurance company is taking a risk on my life. So this means that I also have to meet my end of the bargain. I cannot wake up when they are taking a risk on my life and say that now I want out after 8 months or 1 year. No. So the minimum, which usually I don't even advise clients to look at, is for most policies is 3 years. That's when the policy gets what we call a surrender value. So if you're unable to continue saving, the only time you can get out your money is at 3 years. But before that, you cannot even think about it. But the beauty is the policy has some, depending on where you get your policy from, say if you've lost a job, they give you up to 12 months, and then you can come back and continue with the saving. So what I want us to understand is these are not like keeping your money on a bank account where you wake up and say, now I want my money. Or it does not work like a unit trust where you wake up and say, now I want to get some of my money or all of it. When you take it out, you're committing to the period that you've chosen, usually depending on the reasons why you're taking out the savings. I want us to look at a life insurance policy like planting an avocado tree. When you are planting an avocado tree, you are not looking at it. When I'm planting an avocado tree, I'm not going to look at it like me, Judith, benefiting from these avocados. I will plant it and nurture it, thinking about my children and their children. I might not be able to eat the fruit myself, but I know that there are other people who are going to eat this fruit. So if I have dependents or other people that I care about, when I'm taking out this life insurance policy, I'm also thinking about them. So it does not stop with me. We all pray that at the end of the period, you're there, you get out your money, yes. But what happens if you're not there? Takes me back to the life cover part of it. I'll use an example of the Sure Deal plan, which we have on the market. So if I take out an example, a Sure Deal plan for the next 5 years, and let's say I'm saving 1.5 million shillings per month. My target at the end of the 5 years is 100 million. So this is what we call the sum assured. So this means that I am going to consistently pay 1.5 million for the next 60 months. And then at the end of the 60 months, I get my 100 million. But what happens? God forbid, I pay 1.5, after 1 year, 6 months, I am not there. Because of the life cover, my dependents, my family will first be paid 10%, which we call last expenses. So in this, our example, this will be 10 million, which will be paid instantly to my family. That's the 10% of the sum assured for last expenses. So my family will not have to sell land, and before they start going to the neighbors and friends looking for money to give me a decent send-off, they'll first get 10 million in this example to give me the decent send-off. And then after that, remember I am saving 1.5 million. So if I saved for example, for 1 year, how much have I saved? About 18 million shillings. So this 10 million will be paid instantly, but then again at the end, my family will get 100 million that I did not save. So this is what makes this product different from just your usual savings where you're putting money aside. If I was putting my 1.5 on maybe a savings bank account or wherever I choose to save, and after 1 year I'm not there, my family will access the 18 million that is not there, which is okay. But now in this case, if I have the life insurance policy, my family will get up to 110 million, yet I saved only 18 million. So this means that the insurance company is taking a risk on my life. I could take out this policy and 3 months later a border knocks you and you're not there and they'll have to pay all this. So this means that I have to keep my end of the bargain, which takes me back to the lady who was saying insurance companies do not pay. When you take out a policy like this, the insurance company puts this money aside for your life so that in case of any eventualities, it is paid out without any stories. So you also have to be able to consistently pay so that they can be able to pay out this. That is why you cannot come after 8 months and say, I want my money. No, these are risk products. Why do we take them out? Like I was giving an example, if I planted an avocado tree, I am not thinking about just myself. I've met people, there's a time I met a lady who had a Sure Deal plan actually. And during COVID, she started competing with the standing order. She's withdrawing the money. She wanted to eat all the money. And when I engaged her, she told me, but you know, I got COVID and me, I thought I was going to die. But this is someone who has dependents, who has children. So this means that she did not understand the product when she was taking it out. When you take it out, it doesn't stop with you. But then, like I gave an example of the avocado tree, when you plant it, you have to nurture it. So as you're nurturing it, you know that other people could benefit from it. So even when you take out this policy, your nurturing now is going to be the consistency in your paying of the monthly premiums. You can choose, we have different payment options. It can be monthly, it can be quarterly, it can be half yearly, or even annually, depending on what works for you. So depending on the payment period that you've chosen, you have to consistently pay your premiums. That is you nurturing the fruit, so that if you're there, you reach the fruit. You're able to harvest the fruit. In this example, this is the fruit, 100 million. But even when you're not there, your beneficiaries will not struggle with debt. Sometimes you're not there and there's debt to be paid. They will have this to help them with debt. If you have a mortgage, it can take care of the mortgage. If you have children going to school, they will be able to pay school fees without struggling. So usually when you're choosing a life insurance policy, you have to look at different things. Your earnings, how much are you able to sustain for the next period that you've chosen? 2, your expenses, the dependents that you have, what are their expenses? If tomorrow you're not there, how is their life going to be affected? So basically, you're putting up a fruit tree for them so that in the event that you're not there, they will be able to harvest this fruit. This is in brief what I wanted to share about life insurance policies. Please reach out to us at mindheritage2015@gmail.com or on the numbers that are on your screen. And for a personalized product, depending on what your needs are and your affordability. My name is Judith Kakuze, once again, your financial Mind Heritage, empowering